Hello everyone, and welcome to your Glassnode video report for week 11, 2024. Now, Bitcoin has broken to a new all-time high. We actually tagged $72,000 or just above it this week. So we are in fresh air. Bitcoin really has broken through the previous cycle all-time high. Now, depending on how you want to measure it, this is technically, by my account, if we're going to consider the full bear market effect, this is the fourth time that Bitcoin has broken to a new all-time high. With many people still looking at it saying, well, how many bubbles can really blow up and break through their all-time high 4 times before maybe it just isn't a bubble. So we're going to be looking at a very important dynamic, which is that what happens when we break the all-time high. So as a bit of a lead-in, the market structure really does change quite significantly as we break through previous all-time highs. And in particular, we're going to be focusing on the wealth transfer from the HODLer cohort, the long-term holders, the people who've been around for a little while, to the newer investors, to the speculators, to the inflowing demand. Now, at the end of the day, I think this particular session is going to be quite useful to frame up how on-chain analysis can be used to look at both the supply and the demand, with price being that equilibrium level in between. What we're going to be looking at is saying, well, when we do have people distributing and selling, which long-term holders do when we break all-time highs, they really do ramp up their spending, and this particular instance is no different. What we're looking at is a capital inflow by new demand because every seller is matched with a buyer. So we have this dual effect where the price is obviously moving as supply and demand changes, but it is a dynamic system that is seeking a new equilibrium. So what we're going to be looking at here is this wealth transfer event and look at a few different angles and how we can kind of frame up and get a bit of a structure on what this may look like. So before we get stuck into it, please do give us a rate, a share, and a subscribe. It does help this channel get to more people. And without further ado, let's jump straight into the analysis. Okay, so just as a quick introductory note, we've recently released under our signals component. So if you look inside the dashboard sidebar, you'll find a section called signals. We've recently released this one called a framework for bull market analysis. Now, what we're trying to do here is just explore from all of our experience, right? The Glassnode team spends a lot of time studying these things for our reports and building up these videos. From all of our experience, what does it actually look like when the market breaks through the all-time high, which we're just going to refer to as the Euphoria zone? And what we've set up here is basically a series of mechanics, because we will go through the week on-chain dashboard that will explore kind of a summary of what this dashboard is telling us. But what we do is set up a bit of a traffic light system, starting with green, which is essentially we are now in price discovery above the previous all-time high. We then look at the actual mechanics of the sell side in orange. And then finally, what does it look like when the top has probably been established and we're seeing that kind of big flush out where things aren't looking so great anymore. So this dashboard is quite comprehensive. It really tries to step through long-term holder spending, what actually establishes the top, what metrics we can look at to really model these different zones. How can we look at things like everything from futures and wealth transfer between long and short-term holders, different investors realizing profits, what that looks like in terms of, what does a normal break of all-time high versus really, really heated high degrees of profit taking look like? So there's a whole series of metrics here, and it is a bit of a framework. It's a bit of a set of tools on how to think about top-heavy markets. What does it look like when the market starts to distribute, and when does that supply and demand balance really get hit? So I will leave users to actually go through this. There is a balance of charts here that will be available for both advanced and professional and enterprise users. So please do check this out. If you have any questions, please let me know. Let me just now jump across. This is our week on chain dashboard. Now, many of the concepts we go through here, it's kind of a summary of what you'll see in that full framework. As you can see, that was quite a comprehensive dashboard, and there's a lot of panels in there to help guide people through just how to think about the mechanics. And more importantly, how do we see those mechanics playing out in the on-chain data? So just a couple of ideas to get us started. But anyway, let's jump back into it. We're going to start with that first chart, actually, the Euphoria zone. Now, we're only doing this but just to see, we have now broken above the previous all-time high. So we are now in the fourth phase of price discovery. I would say that, this is kind of the genesis period where it hasn't really broken an all-time high because it never really had one. Following that first bear market in 2011, yes, we got a double pump, but this is kind of one break. So let's call it breaking the 2011 all-time high. We then broke the 2013. This is when Mount Gox went down. And I mean, this was probably a pretty scary bear. I wasn't around for this time. But it took us over 3 years from 2013 all the way through to the back half of 2016-17 before we broke up and above. We then had a 2021 break of the $20,000 all-time high. So this would put us at our fourth all-time high break. So as I mentioned at the start, it becomes increasingly difficult to call something a bubble and a Ponzi scheme when things break through all-time high and the market just consistently says, well, maybe not. Okay, now, if you've been watching this channel for a while, you'll probably have heard me beating the drum about the realized cap. We're going to go through that again because the realized cap is such a powerful and important metric. And whilst we broke through all-time high from a price perspective over the last week, the realized cap has actually broken through it a couple of weeks ago, and it is now at a new all-time high of over $510 billion. Now, the realized cap, because it values every coin at the time when it last transacted, you can really think about it like the amount of wealth stored in Bitcoin, saved in it, actually invested in it at the time when it happened. If somebody buys their coins at $10,000, they're going to be saved at that $10,000 price stamp until they move again. Now, there's obviously error bars around individuals, but on an aggregate level, it tells a pretty consistent and fairly robust story over time. So now that we're at an all-time high, and actually since October last year, no, actually, sorry, I take that back. In March this year, now we're recording on the 12th of March. So in the first 12 days of this month, $40 billion has been added to the realized cap. So that is telling you there's been $40 billion worth of capital inflows. Now, we looked at this the other week with the ETF multiplier effect. So if we're looking at something like $40 or $50 billion flowing in over the course of half a month, we can then look at how much the market cap has increased, and it starts to give you a bit of a measure of that multiplier impact. Now, down the bottom here, we've actually got the 30-day change in the realized cap. Now, we'll come back to this later on in the piece. The realized cap is essentially realized profit minus realized loss, and then a big cumulative sum. So net profit or loss. So what we're looking at here is periods when we have net capital outflows in bears, net capital inflows in bulls. And we can see that we've rallied up to a pretty high level. It's $54 billion per month flowing into Bitcoin. And this is coincident with the peaks that we saw back here in 2021. But just remember that peaks generally get larger and larger over time because we're measuring it in US dollars. We're not rallying from 10,000 to 60,000. We're actually starting this market at 69,000 and rallying higher from there. So because Bitcoin grows each cycle, we do tend to see these rates increase. But just as a sense of scale, we're at a similar level of capital inflow on net relative to the 2021 bull peak, which is certainly something to pay attention to. Now, the realized cap HODL waves takes the realized cap, and much like the HODL waves breaks down the Bitcoin supply into age bands, the realized cap HODL waves does this, but for USD. Now, for most people who want to be studying the cyclical behavior between long and short-term holders, the realized cap HODL waves, in my opinion, is far more useful for people studying the market than the HODL waves. The reason why is that I don't particularly care that Satoshi's got 1 million coins that are 10 years old. So in a BTC sense, which is what the HODL waves are, they represent a very large portion of the area. So they're also not economically meaningful. They're not moving. They're not going to move. They might, but let's just assume for now that they're stationary. You're basically squeezing up your chart and filling it with information of stuff that's not really economically meaningful. The realized cap HODL waves, you actually can't even see the 10-year-old coins because they last moved at a price which was basically nothing. So in many instances, we're only looking at the economically valid, the USD basis for coins moving around the system. Now, I'm going to use this just to set up. In the actual HODL waves chart itself, you can turn off and on legends and see different cohorts. But the really clear thing that stands out is that we get really hot. The hot colors explode towards the cycle peak, and the cooler colors explode towards cycle lows. This is the transfer of wealth from the HODLers in the bear, in the greens and the darker greens, transferring their wealth to the new buyers in the hot colors. These are the 1 week, the 1 day, the 1 month, the 3-month-old coins. So what's important to know is that the young coins are really moving higher, and these can only move higher when older coins are spent. And that is the wealth transfer that we're going to explore with the concept of this all-time high break as kind of our anchoring point. Let's see what that transfer looks like compared to previous cycles. So one way to look at this is through long and short-term holder supply, which we touched on the other week. You can see here long-term holder supply in blue really does decline quite severely into the cycle peak. And for whatever reason, whatever magic, I don't know exactly the mechanics of this, they tend, when we get the first major sell-off, let's call this the shot across the bow sell-off that kind of ends the bull, long-term holders really do stop spending. It seems that they distribute heavily on the way up, and then once we get that kind of bear market starting event, they just slow down and they just stop their spending. Now, short-term holder supply in the red obviously ticks up much, equal and opposite. It's important to remember that long-term holder supply plus short-term holder supply plus exchange balances equals the circulating. So it's a 3-region zone. We're not looking at exchange balances here, but you may note that long-term supply has declined from its all-time high, which is just under 15 million, by 660,000 Bitcoin. Short-term supply has increased by about 810 million Bitcoin. Sorry, 810,000 million would be something outside of consensus. Now, where does that extra 150,000 Bitcoin come from? That's exchange withdrawals. So again, coming back to that first concept I spoke about, we are seeing long-term holders spending, and about 57-60% of that is GBTC. So there are people selling and taking profit. But we also have people coming in as new demand. Every seller is matched with a buyer. So the uptick in short-term holder supply is a representation of capital inflow alongside the realized price climbing and the realized cap climbing. These are all capital inflows. But the next question is, obviously at some point, they hit saturation. They hit a point when there is too much sell side, and we move from a demand-driven market cycle back towards a supply-dominated market cycle where there's too much supply and we end up moving back into a downtrend and then ultimately a bear market. So what does that kind of equilibrium point look like? Now, short-term holders at the moment have pulled 150,000 Bitcoin off exchanges plus absorbed all of the coins coming from long-term holders just to kind of square that circle. So it does show that there's a pretty substantial amount of new inflows, and some of those short-term holders will go on to become long-term holders over time. But it's just really just getting your head around this concept of one side tends to distribute as we break the all-time high, the other one tends to be that demand side, and we're trying to net these two off against each other. Now, this chart, just to try and understand what does that saturation point, that equilibrium point look like? Now, this is not direct science. This is not trying to pick the absolute equilibrium level. It's just trying to help people think how to think about this type of thing. So what I've plotted out here on 2 separate axes, by the way, in blue is the percent drawdown from all-time high of long-term holder supply. So essentially of the aggregate long-term balance, how much gets distributed in the bull? The flip side of that is from the short-term holders, now they're coming from a much lower base, so you can get over 100% numbers. How much does short-term holder supply increase relative to its cyclical low? All right, so we're essentially saying from short-term holders, let's take this as our cyclical low. How much has short-term holder supply increased? And let's take this as our cyclical high for long-term. How much has it decreased? We're measuring these in percent. Now, again, we only have a handful of observations here. It's a little bit clouded by 2017, where we had the Bitcoin Cash hard fork and lots of old Bitcoin was spent and moved to take advantage of that dividend. And there's all sorts of different components. So just keep all these factors in mind. Ballpark numbers. Long-term supply tends to decrease by about 11%, 14%. I think this was about 25%, 24%, 14% in 2021. And here we are at about 4.2%. So let's just, draw a horizontal line here and say somewhere around 14, 15%. Well, in that instance, if we're at 4%, that's somewhere around 30%. So if you look at it from that perspective, the distribution cycle, and again, very, very ballpark numbers here, very simplistic, overly simplistic assumption, would tell you that we're somewhere around 30% through this distribution cycle, right, as we come up to the all-time high. If we look at it from the short-term holder perspective, we typically get numbers of, plus 65%, plus 83%. This one here was plus 122%. So we see fairly substantial upticks, but let's just take something in the order of plus 80%, plus 90%, something in that ballpark. Well, short-term holder supply has currently upticked about 35%. So again, we're talking about 30-odd%. So it's telling you we're somewhere in that dynamic of 30% of the way through, or a third of the way through what is a typical distribution cycle, based off just a handful of prior cycles, right? We don't have that many data points to go off, but this is kind of where that supply and demand hit an equilibrium point, right? We're at 30% of the way between, where we start when we break all-time high to where we eventually get to, which is typically around cycle tops. Now, the RHODL ratio is actually one of the more popular, and it's one of the more old school metrics originally developed by Philip Swift. So the RHODL ratio is essentially a metric that takes the 1 week old coins and divides it by the amount of 1 year to 2 year old coins, and more specifically, the wealth held within those. So we're actually looking at the USD wealth held within those two coins, the realized value inside those two groups. So high values means that we have an explosion or a very, very large amount of the supply held by relatively new investors. Let me just go back up to our HODL waves. That's what this is. A very, very large proportion of the supply or the wealth in Bitcoin is held by 1 week old coins or younger, and a much, much smaller proportion is held by 1 year to 2 year up there in the green. So you can see here on the axis, it actually moves in exponential or logarithmic space. So when we have these very high values, it means that we're seeing a flushing out of old coins and an explosion in newer demand and speculative premium and all these kind of things. Low values obviously happen in the exact opposite. Now, what I've done with this chart here, I've got the all-time high on price in green, just to help understand where we are in the cycle. The red line here is our current RHODL ratio value, which is 6,700. And the blue zones I've highlighted is in the past, when has RHODL broken through this level? In other words, when has RHODL been at this level before? On the way up, tracking higher. And what we essentially see is that it is at this level, meaning that the balance of wealth between 1 week old and 1 year to 2 year old coins is pretty much at the exact same level that it is at every previous all-time high break. In other words, things are happening exactly the same as they have in every cycle. Bitcoin is just such a fascinating creature in this regard because we just see the same patterns in investor behavior time and time again. Here we are at the all-time high, breaking up to a new one, and in the balance of wealth between 1 week and 1 year to 2 year old supply is exactly the same. This is with all of the weird nuances. This is with everything that happened in 2019 and March 2020 and, interest rates going higher and, whatever happens in the world, right? ETFs going live. Bitcoin investors seem to do the exact same thing cycle after cycle. It is strange how similar these things tend to play out. This is just another example of, kind of how consistent these patterns tend to be. Now, this chart here is just another way to visualize this concept. I've actually broken out and pulled those two components. In the red is the USD wealth held by the 1 week old coins, and the blue is the USD wealth held by the 1 year to 2 year old age band. And you can see the exact same mechanic. These peaks, which is a low RHODL ratio, right? Low RHODL occurs when we have a maximum wealth held by the HODLers, longer term investors, and a minimum by speculators. Bull market tops happen when you have a maximum wealth held by speculators and a minimum held by old HODLers because they've spent their coins. You have a flushing out of the old hands and a new wave of people who are just less familiar with Bitcoin tend to own the majority of the wealth. Now, these crossover points, which I've highlighted, I've kept the blue consistent. Note that it typically happens when we get a switching of dominance. Long-term holders become the least dominant in the system. They become the least dominant in the system, and the 1 week old coins essentially take over as where the majority of the wealth is transferred. Now, we are in the process of having that exact same crossover as we speak. So again, these all-time high breaks look almost exactly the same. Obviously, they vary around the margin, but the mechanics are very, very similar, which is why we have the first dashboard that I introduced. That is designed to try and capture and just help people understand and think about these mechanics that happen in this euphoria phase above the past cycle all-time high. Okay, only two more charts, switching gear just a little bit, but keeping within the same theme. So why do the old hands spend, essentially? Why do long-term holders actually spend their coins? Because profit and loss is a thing that drives most people in markets. This chart here is realized profit. Now, again, if you've been following this channel for a long time, you'll know that I beat the drum over and over about realized profit and realized loss. Likewise with unrealized profit and loss, but really the realized profit and loss stuff is essentially what drives people to, that is the decision that people are making. When we see upticks in realized profit and realized loss, it is telling you so much about the sentiment, positioning, what the market is really doing. Are they taking chips off the table? Are they sitting tight and doing nothing? What is their overall sentiment? Now, this is a very simplistic model. All we've done here is put a long-term mean plus one standard deviation in blue. And the only purpose here is to just highlight. Now, obviously, you could have multiple standard deviations, 2 and 3 and 4, and try and highlight really extreme events. But this is purely just to look at how similar all-time high Euphoria zones actually look. Now, as we broke through the previous all-time high, right here in 2016-17, realized profit started to consistently break above one standard deviation. This is the profit taking by the long-term holders. This is the changing of ownership structure. People who understand Bitcoin, have been around for a long time and bought the bottom of the bear market, liquidate at increasingly large profit multiples all the way through until they oversaturate demand. And they kind of know when they've oversaturated demand because they stop spending. We saw the same here in 2021. We occasionally see these spikes here and there, right? In fact, you can actually see capitulation bottoms. If you do this with realized loss, you'll get it much clearer. But realized profit, some people really do panic who bought in the previous bear and they think it is actually going lower and they panic and get out. So we do see these mechanics. We have just broken above that level. As we break the previous all-time high, much the same as every single previous cycle, realized profit breaks up and we see statistically meaningful profit taking. So, again, some profit taking makes perfect sense. That's what makes a bull market go around. That's the distribution pressure that we all would expect to see. Really, the challenge for analysts and the thing to look at moving forward, and what that first dashboard I talked about was trying to capture, how do we find that equilibrium point? Because obviously, markets can be irrational for a very long time. They can rally much higher than people expect. This is a bit of a framework to help frame and box in and get boundaries around the problem to try and understand where that balance point and inflection point really is. Now, the last one I want to close on. This one I've alluded to in previous videos. I've talked about it briefly in previous videos, but I think this one is it's just a lot of information in this chart that I think is super valuable, but it's also quite simple. So sticking with the realized profit framework, SOPR is another one of the most popular on-chain metrics. Rather than looking at it in terms of USD, how much profit or loss there is, SOPR essentially is dimensionless. It says what is the average profit or loss multiple locked in by the market. Now, the blue trace here is entity-adjusted SOPR, so we're only looking at economical transfers. We've got rid of anything that's all exchange internals and self-spends and wallet consolidations and all that stuff is filtered out. So it's only looking at coins that are, to our best understanding, using our heuristics and clustering, to our best estimate, how many coins are actually changing hands. That's the right way to think about it. So deposits and withdrawals from exchanges will be counted within this metric because the coins are changing hands. So when we're looking at SOPR, in the background in orange, this, by the way, is SOPR, entity-adjusted SOPR -1. Right? So we've just subtracted 1 because it normally oscillates around a value of 1. So negative values here are essentially values trading below 1 in the classic SOPR sense. So it's essentially a realized loss on average. Positive values are a realized profit. So that's the only transformation we've done there, is subtract 1. In the orange, it's futures funding rate. Now we've annualized it. Now, whether for whatever reason, by annualizing it, we basically bring it into the same dimensional plane, right? It's essentially at the same magnitude and scale as SOPR, -1. So we can essentially plot them over each other, and you can see the striking similarity between these two charts. There's a bunch of other ones like this, in fact. If you look at things like sell-side risk ratio, which is the amount of realized profit and loss relative to the market cap, the realized cap, sorry, it looks exactly like options implied volatility. These charts are telling us from an on-chain pure spot movement of the billions of dollars of coins flowing in and out of exchanges, changing hands, trading. There is a signature in all of that. And it is telling us a very, very similar and congruent story with what's going on in the futures market. So the way that I like to think about this chart, because I've been puzzling over this for a long time and I think it's fascinating, we are looking at two statistically significant subsets of Bitcoiners. We're looking at those who hold spot, study the market, wait until we break all-time high, buy at the lows, and distribute some at the top. We're looking at people who have studied and understood this market. Now remember, SOPR comes from the perspective of people who already hold Bitcoin. So their position is that they already hold it. So if you think about what SOPR is telling you, when the average value is positive in this instance, or greater than 1 in the classic SOPR sense, when it is above 1, or in this instance it's positive, people are selling Bitcoin because they believe that it needs to go lower, because they're taking profit. They believe that this is their price. It's time. Of course, you can sell a partial of your stack, but let's just simplify the framework. People are selling Bitcoin because they want to take profit. They believe that this rally has done its job. It's done it, at least for them. When it's negative, it is also them saying they believe it's going to go lower because they're locking in a loss. They're panicking. They're selling. They bought it high and they're selling it low. You would only do that if you were afraid or you needed the money. But if you're afraid that Bitcoin is going to go lower, and remember, SOPR comes from the perspective of people who already own Bitcoin. So the only expression they can really do by spending is believing that it's a good time to get rid of it. That's essentially why SOPR picks up these different components. And remember, we get these large negative prints in bear markets when it really is the hardest time to hold Bitcoin, right? Down 75%. And if we go back, there's usually a whole bunch of things blowing up and, Bitcoin is dead for a decade. Now, why does SOPR look exactly the same as the funding rate chart? Well, that's another statistically significant subset of the Bitcoin market. When you're doing a census, you don't query every single person. You generally get a statistically significant subset, of which the billions of dollars flowing in and out of spot markets is one of them. The other one is we can query the futures market, and we can measure this via funding rates. How much leverage is there? How much incentive is there for market makers to come and actually close that arbitrage? How much sell-side liquidity or buy-side liquidity can come in to actually balance and do that cash and carry trade? How much interest rate are people willing to pay for the privilege of going levered long? So let's put these two metrics together. When we have upticks in both SOPR and funding rate, the spot market is telling you it's time to take profit, or at least they are taking profit. The investors who are creating these SOPR signals are signaling to the market that I am spending my coins because I believe that Bitcoin is overvalued at these prices. Thus, we get a positive and increasingly positive SOPR. At the same time, if we query the futures market, people are willing to pay sometimes excessively high interest rates for the privilege to go levered long, quite often at the wrong time. So when we get these extraordinarily high funding rates, there's also a very, very large incentive and action from people in the spot market to take profit. But there's a bunch of people who typically near bull market tops, remember we're talking about an influx of speculators and a reduction in HODLers. The HODLers are printing SOPR. The speculators are printing funding rates. So where are we at the moment? We can see that October was a real turning point. We saw positive nature come back into both SOPR and funding rates, and both of them have returned to post-2020 all-time high levels. We're at a very, very similar level where there's now positive funding rates, over 45% sometimes annualized. That's going to create an incentive for market makers to do sell side. And and the cash and carry trade, we also have people starting to sell their coins in increasingly high profit multiples. So we could look at this through the lens of SOPR or MVRV or short and long-term holder cohorts, a whole bunch of things. But the structure here is really telling us about what is happening in the spot market and what is happening in the futures market. And we would put these two pieces of information together. Quite often we get a very, very congruent and a nice piece of confirmation that we're actually reading and getting the same information coming out of two completely different but also related sets of the Bitcoin market. So that is there's a bit of a deep dive there, but please do let me know if you have any questions there, because I think this is something I've been puzzling over for a long time. I personally find it fascinating. I think when you look at things like sell-side risk ratio and plot options implied volatility over the top, you will find the same. You get these very, very interesting correlations where you can start pulling options pricing out of on-chain transactions. It's kind of neat. This is an area of research, but I just want to get that out there and certainly get people's thoughts and comments, because I think it's a really interesting concept. So thanks for tuning in for that session, folks. Hopefully you found that one useful. As you can see, breaking through the previous all-time high kind of looks the same as every previous all-time high break. We have a very, very similar wealth transfer taking place. We can see how that wealth transfer kind of reflects and resembles what's gone in previous cycles. We're at a very, very similar level. This transfer from the HODLer to the new demand and the speculators, using things like realized profit and realized cap change to measure capital inflows. And then that last piece really exploring SOPR and funding rate, how they're kind of speaking the same language, just from a different perspective in terms of the investor who is printing those certain values. So, hopefully that's a useful thing. I know there's a lot of kind of deep dive in there and a bit of balance, but please do let me know if you have any questions, and I will see you in the next one. Cheers.